MSTY is the yieldmax MSTR option income strategy ETF. It used to be one of the most popular high yield income ETFs on the market because it was paying over 100% distribution rate while having a stable NAV. Now things have changed. A lot of people are not a huge fan of it. It's down 42% all time, and it has decreased by 75% from its all-time highs. Now, this has caused a lot of investors to seek out other investments, one of which was ULTY. It was a weekly payer, it had diversification, and it was very stable. But MSTY has not been doing so hot lately, and it is all based off of MicroStrategy stock because remember, these are single stock ETFs, and it's basing its performance off of the underlying stock. In this case, it was MS, which has gone from $455 per share in July of 2025. Now it's down to $289 per share. So it's about half its share price from its highs. And this has caused a drop significantly in MSTY because it follows that one underlying. And that is one of the reasons I'm not a huge fan of these single stock ticker ETFs. There's just too much risk associated with it because you're relying on that one underlying company to do well. But one thing that is interesting is yieldmax recently changed their whole single stock ETF lineup. Instead of paying out monthly frequency, it's going to be weekly, which is very interesting to see. Now people are a little bit excited, but I still think that MSTY is lacking, and I'd rather have a better ETF in its place, especially if you are buying this ETF because you are bullish on Bitcoin. There are a lot better Bitcoin ETFs out there, one of which is going to be YBIT, which is actually the YMAX Bitcoin Option Income Strategy ETF, and while it hasn't been doing too well either, it could be a better option because you are not having that proxy, which is MicroStrategy. Now, of course, for a Bitcoin covered call ETF, my top pick would be BTCI, which gives you 30% distribution rate and it pays out monthly distributions. So it is not weekly. A lot of people are not happy about that, but I do think that this is going to be one of the more consistent payers on the market because it has good NAV. And it's backed by NEOS ETFs, which have been a high quality ETF provider. Now, taking a look at the fund page for MSTY, you are getting that weekly income, you're getting that long exposure, but I do think there's too much risk associated with it in order to get an 80% distribution rate. So a lot of people have been losing money. Yes, losing money. That is going to include the total returns, reinvesting those distributions. The stock has dropped way more than you have been receiving, which makes this a not attractive choice. And with these actively managed ETFs, you have to monitor them very closely because if they're not performing how you want it to perform, you have to jump ship and sell the stock because it relies heavily on the fund managers and there's a lot of other options out there. So you don't want to fall in love with a stock. ULTY is following that same trend. It used to be quite good earlier in the year, very stable NAV, had a little bit of share price appreciation in fact, but it has been on a steady decline. Now, even though it is at a very low price point at $5.15, it's only down about $1.30 from its July highs. And if you're factoring in all those weekly distributions, because annualized it's about 80%, you may be break even. So that is something to consider. And that is why I am still comfortable holding ULTY. I'm still positive total return, factoring in all those distributions I've received. And I've held this ETF for quite some time now. So I've received thousands of dollars of distributions, which is contributing to my total return. But if you don't like ULTY either, you can obviously sell the ETF and buy something else you're more comfortable with. There are a lot of options in the market right now. There's over 100 weekly paying dividend ETFs, and there's going to be way more coming out. And in fact, there is one ETF, QLDY, which pays out 2 times every single week, which is absolutely insane in my opinion. And Defiance is also coming out with the same strategy, both on the S&P 500 index as well as the Russell 2000. So if you don't like the NASDAQ 100 index, but you do like this lightning spread income ETF strategy, you could wait for those two ETFs to be released. And in my opinion, it's kind of like a gimmick, paying out 2 times a week. I believe the first payout is on Mondays, and then the second payout is going to be every Thursday. A lot of people want dividends every single day. Is that even possible? A lot of people don't seem to think so, but we are getting much more closer to daily dividends, especially with this innovative ETF, QLDY, which pays out 2 times every single week. Absolutely insane in my opinion. And if we're taking a look at the total returns of MSTY, it is down 3.5% year to date, as well as actually it has a positive total return if you held it since inception of 189%. Now, most people have not held this ETF since inception. They've probably got around in early 2025, so they may be negative total returns. And I personally have a pretty high cost average of about $26 per share. So I'm down about 50% from share price alone. But if I'm factoring in all those distributions that I've received every single month, now it's going to be every single week, I'm pretty much at my break even in my opinion. And I do want to note that even though they switched the payout frequency from monthly to now weekly, we do want to note that nothing with this ETF has changed. The payout frequency does not really have a big impact, but I do think it has a good impact in the fact that you can use that income a little bit earlier if you want to pay out some bills. You don't have to wait till the next month, because a lot of people who are using these income ETFs and they pay out monthly, they do have to probably take out some debt if they have some unexpected bills, but weekly payouts help paying out bills. And we do want to note that in order to invest in MSTY, you have to be okay with the limited upside potential because it doesn't have any growth with those covered calls. And in fact, if we compare the returns of MSTR to MSTY, MSTR actually has a slight positive year-to-date return, and it actually has an overall return of 306% since February of 2024. So you do want to understand that these income ETFs are purely for income. And if you want growth, if you want unlimited upside potential, you want to invest in the underlying. So if your main goal is income, you want to use that income, say you're retired or you have bills to pay and your 9-to-5 job is not covering it, you want to choose the income ETFs in my opinion. Now, of course, this is not financial advice, but that is the main difference between an income ETF and a growth stock. And if we take a look at the distribution history, we want to note that this first distribution of 60 cents, it's not going to be 60 cents every single week. That would be kind of crazy. It's because we have about 3 weeks, 2 or 3 weeks of distributions baked into this first distribution. Now, next distribution, in my opinion, is probably going to be around 20 to 30 cents per share. So don't get fooled by this cash amount of 60 cents, which is very high. It does have about 3 weeks worth of distributions baked into that one. So the next weekly distribution for MSTY will be the real yield. And another reason why I say you don't want to fall in love with a single ETF, if it's not performing well, you want to close it out as soon as possible. And it's because these actively managed ETFs have really high expense ratios, which can contribute to NAV erosion because you're going to be paying that 1% expense ratio every single year. And while it might not seem like a lot, during bear markets or periods where the ETF is not really doing anything, you're still going to have some declines in the share price because that NAV is going to factor in that expense ratio. These are very complicated ETFs. Part of it is going to be return of capital. It's very nice that they have on their website, the complete redesign has how much percentage is going to be return of capital. So this is going to be useful if you're trying to calculate how much taxes you have to owe, because return of capital is basically deferring your taxes. And since we're seeing a lot of return of capital from the past few months, you may be paying less taxes in the upcoming tax year than you might expect. But of course, after that year and after your cost basis has gone to $0, you're going to pay a hefty tax bill. So you have to be ready for that. What it's doing is just deferring your taxes. And if you have any more questions about taxes and return of capital, leave a comment down below and I'll be happy to answer any questions. They even have a nice little explanation on their website right under return of capital stands for, or ROC return stands for return of capital. And it's basically because of how complicated option income works. So what are some alternatives to MSTY? Well, if you're into single stock option income ETFs, they have a good lineup. I'm not a huge fan, as I mentioned, especially since you are capping your upside. And these are companies that are expected to grow more and more over time. But if you do want to choose one of them, I would probably put my money in AMDY or even NVDY, which is NVIDIA, because of how much AI is booming right now. But right now, I'm staying away from single stock ticker ETFs as much as I can, and I think the best alternative would be BTCI. And even though they're not really related, it's pretty close. It's in the crypto space. You're investing, you're getting exposure to Bitcoin, you're getting high income, while 30% is quite low, quote unquote, compared to MSTY. It is more reliable in the share price, and even though you're getting it every single month, it still is a good trade-off to have such a solid ETF from Neos. And I hope that in the future, Neos comes out with some weekly ETFs. They definitely have the capability to, and if we push for some requests for some weekly paying ETFs, maybe they might do that in the future. And another option is going to be Total Capital YBIT 0 days to expiry covered call ETF BITK. So this is going to be paying out every single week, but we don't really know what it's going to do in terms of distributions. We can see it's down 15% in the past month, which is kind of crazy. We do know that Bitcoin has crashed in the past week, so that is not very surprising. But we take a look at the distribution history. It paid out an insane $1.50 distribution, which equated to 300% annualized yield. Absolutely insane. But we can see the next 2 weeks, 50 cents per share and then 30 cents per share. So we can see the distributions dropping. And while Bitcoin dropping had a big factor to play into it, I do think that they did beef up that first distribution to attract a lot of investors. A lot of ETFs that are newer tend to do this to get some of the market share because it shows up as a very high dividend yield and a lot of people place their money into it. So the best thing to do when you see a new ETF is always to check it out, make sure you understand what they're doing, and also wait a few weeks to see if the distributions can be consistent or not, as well as is the NAV stable or is it going to continue to erode. But let me know down below what your thoughts are on MSTY. Are you still holding this ETF or are you selling it for some other options? Let me know down in the comments if you have any alternative ETFs you're swapping out MSTY for.